Well, 2022 was a year when inflation came back to haunt millions of people around the world economy. Inflation reached 11% in the UK. But I think there are some good reasons to expect inflation to fall in 2023, and I thought I'd pick out 4 key reasons for you in this short presentation. Well, as Chris Giles has noted in a recent Financial Times opinion piece, a generation has had to worry about a rapidly increasing cost of living for the first time in their working careers. Here's the chart showing consumer price inflation for the UK from 2012 to 2022, and we can see that, having had many years of low inflation at or around 2%, the rate of price increase climbed sharply and reached 11% in October 2022, more than 5 times higher than the inflation target for the UK. But although there's plenty of uncertainty around, I think there are some reasons to expect a period of disinflation for the UK over the next 12 months. So here are 4 reasons I think inflation will fall in the UK in 2023. The first is that some of the sharp energy price increases we saw in 2022 hopefully won't happen again this year, and therefore the price spikes of last year will drop out of the consumer price index calculation. Indeed, as I'll show you in a second, prices paid in Europe for natural gas have fallen in recent months quite sharply, in particular in part because the German economies have managed to increase their gas storage supply. Here in the UK, the government has introduced additional price support measures that will last until April 2023 and perhaps even longer, although the scale of that support is likely to be cut back as we go through the year. And if we just move beyond natural gas, the world price of crude oil is well below the high early on in 2022. Let's look at the data. So this is a chart showing European Union natural gas prices, and you can see that this is during 2022, and they've now fallen by, well, gosh, nearly 40% actually just in the last few days. They're now nearly back to the level before Russia's invasion of Ukraine in late February 2022. So although the UK won't necessarily benefit directly from this, it's outside the European Union, we do buy some of our gas from the EU, and this should be an important factor going into 2023. And this chart's quite interesting. Here's a chart showing the crude oil price in dollars per barrel since the start of 2021. And again, you can see that having risen sharply, very sharply, in the early stages of 2022, and remained pretty high above $100 per barrel through to late summer, there has been quite a significant drop-off in the world price of crude oil since then. So that should help bring down things like petrol prices and diesel, although, of course, people are complaining that the price that you're paying for your petrol at the pump was very quick to go up in the first half of this year, 2022, sorry, but there's been very slow to come down, raising questions about potential profiteering by petrol retail companies. My second reason why I would expect inflation to fall in the coming year is that the exchange rate has appreciated. Sterling has recovered some ground particularly against the US dollar. Thinking back to early September, there was a calamitous depreciation of sterling as the financial markets reacted very badly to the mini-budget fiasco, Kwarteng's mini-budget in September, and sterling got close to parity with the dollar. £1 would buy $1. But since then, it's recovered some ground. Here's the chart showing sterling against the dollar. So the low point on my chart is 1.07. It actually fell below that for a few hours and things, but 1.07. Since then, it's now climbed back up to about $1.20, $1.25. So it's recovered some ground. And of course, many of the products we buy from overseas, including those commodities, they're priced in dollars. So if the pound goes up, if it appreciates against the dollar, then the price of our imports tends to come down a little bit. Again, a factor helping to bring down inflation, a rising pound. So the third reason is that, of course, the Bank of England has been raising interest rates. So this is important to link monetary policy to inflation. They've raised interest rates in each of their last 9 meetings. Base rates have climbed from almost 0.1% during the COVID pandemic to 3.5% now, and most people expect interest rates to carry on going up. Now, higher interest rates have a deflationary effect on demand, including consumer spending, which is the biggest single component of aggregate demand. And they also put pressure on businesses to cut costs. Implicit in higher interest rates is the central bank sending out a message or a signal to businesses and consumers to keep wages under control and to keep costs under control. But of course, there's a cost. There's a cost to growth, to jobs, to investment. So the central banks will have to tread carefully, I think, in the early months of 2023. If they raise interest rates too far, they'll deepen the recession. Of course, they want to control inflation, but inflation may well be coming down already. Here's the chart showing base interest rates, just to keep you right up to speed. It's now 3.5, sorry, that should be up to 3.5% now. They went up by 0.5%, didn't they, of course, in the December meeting. So it's now 3.5% on the base rate. And the fourth reason is the wider world economy. It's likely that the UK is already in a recession. So that on its own will help to bring about some disinflation during 2023. The world economy is also slowing down. Just taking the IMF's forecasts in their October World Economic Outlook, GDP growth across the world is forecast to slow from 6% in 2021. That was quite high because of the bounce back from the pandemic, to 3.2% in 2022 and 2.7% in 2023. Now, normally, the world economy grows by about at least 3% a year. So all the economies, developed, advanced, emerging economies, etc. So less than 3% growth technically is a recession. According to the IMF, more than 1/3 of the world economy will actually contract this year or next. The United States, the European Union, the UK and China will all sort of slow down. So even if you're not technically in a recession, it will feel like a recession. And weaker world growth of demand will bring down the prices of the things that depend on world demand, in particular commodities, raw materials and energy, etc. And interestingly, this chart shows the global price of energy. It's a monthly chart. The index 2016 is 100, and you can see the surge in energy prices, of course, in 2022. But it does appear as if the world price of energy, that's all energy sources, not just gas, has now come off the peak. And if you look at the price of all commodities, that's things like food, all that kind of stuff, wheat and copper, the price of all commodities. Again, we're starting to see perhaps a turnaround in world commodity price inflation, which hopefully, along with the strong exchange rate, will help to control inflationary pressures in the UK. Because, of course, the UK is an open economy. We import many things we can't produce ourselves. So if those prices are falling, allied to a partial recovery in the exchange rate, we should see a fall in inflation. And falling inflation will be undoubtedly welcome news to millions of people who are facing quite significant pay cuts in real terms this year. The blue line shows wage growth, about 6% at the moment. The orange line shows inflation, 10.5%, 11%. That gap is the cut in real wages for millions of people in the last year or so. Allied to that, of course, has been an increase in the tax burden. So real disposable incomes after taxes and price changes, have been falling quite sharply. And that's the main reason we're going to go into recession in 2023. So hopefully inflation can fall back down to, let's say, 5-6%, and come back closer towards the growth of wages so that real wages stop falling. Well, lots of uncertainty. The future path of inflation will depend on many, many factors. What happens with the Russian-Ukrainian war, the impact of sanctions on Russia, the Chinese economy is stalling. So there are many uncertainties, for example, about supply chain disruption from China affecting industries in the UK and the United States and so on. So lots of uncertainty. But I think overall, I would argue that inflation should come down this year. It would be very difficult if it doesn't. And it's needed because high inflation is painful. It tends to hit poorer families disproportionately hard. It is regressive. It hits savers. And I think we've been reminded in 2022 of just how difficult and how damaging what the economic and social costs of inflation can be.
Well, thank you for joining in. I hope you found this useful. If you found it useful, please press the subscribe button or press the notification button to get a notification of new videos as they appear. Stay healthy, stay happy, take care, and see you soon.